Let's check in right now with Simon Mariner from St George Bank. And Simon, I know everyone's watching that Ken Henry speech today. We haven't got all of the details yet. It goes on for a couple of hours. But just in general terms, I saw one comment already from the Treasury Secretary saying that he expects the economy to grow below trend for the next year or so. And I immediately looked at that and thought that seems to be quite at odds with what the RBA said earlier in the week. They were talking about at-trend growth. And I know Josh Williamson, who I've been speaking to over the email at Cities, he's saying that he believes that is completely at odds with the RBA's view. And maybe they're kind of towing the government line because they've got the MIFO coming out later in November. What's your thoughts on those kind of differing views of where the economy is headed and kind of where we're at right now with that?
Look, a good question, I suppose. I've not really been listening, so I can't really speculate too much on that. Certainly, the RBA, commenced their tightening campaign this week, and they did comment that they, sort of felt positive about sort of global economic outlook and quite positive about the stability of the economic growth that we're seeing here in Australia. The big figure, I suppose, that we saw yesterday that might sort of point to that would be the employment data figure that we had that came out, unequivocally strong, way outside of expectation, a bit of a rogue figure, perhaps you could suggest, but the RBA certainly would have been pleased with that because that would have supported their move on the cash rate decision or monetary policy this week. I suppose all in all, there is a bit of confusion, I suppose, out there. Of note, there was an economic survey done this week of 17 participants of where they saw the cash rate, which is a good measure of expectation of economic growth that's going to be going on out there in the local economy. Not much difference between now and the end of the year, but you've only got to look sort of 6-7 months out till June next year, and we've got a range of 3.75 on the bottom side to 5% on the top side. So, a little bit perhaps uncertainty out there. But what we are certain of, I suppose, is that those interest rate differentials perhaps between us and the rest of the world is certainly helping to push our currency to higher grounds.
It does seem, when you're looking at these comments coming from Ken Henry, saying things like the stimulus impact probably peaked in the second quarter of 2009. The stimulus will detract 1.25% from GDP in 2010, still remaining cautious about the economic outlook. It doesn't seem like when you look at the RBA's statement from earlier in the week, they gave themselves as much room to move. Like to say that we're going to be growing at trend growth, which we consider to be about 3%. It doesn't seem, and I know this is a view of some economists, that there's a lot of room for error there, maybe?
No, not much room for error at all. Look, it is interesting, and I suppose there's a couple of things in the balance that the RBA's certainly got to be mindful of and weigh up. When we see in a high Aussie dollar, for example, I think about our net exports, certainly something that they've or has been underpinning recently. Some of the positive GDP results we've been seeing coming through has been through our net exports. So obviously, a high Aussie dollar makes our exports look relatively, less attractive. So even though the RBA is going to be mindful of that, I don't think they'll actually interfere in the currency, and all they can do really is set the base rate, the cash rate there. First G20 economy to start moving forward on their campaign, so it's a bit of a historic week there, if you like. But I do believe it will be a campaign and perhaps quite measured and quite orderly. Nothing suggests we're not going to sort of see 25 basis point moves by our central bank on a month-by-month basis, maybe skipping a month to wait and see, what the data shows, and then continually moving on. You compare that to perhaps some of the other economies around the world who have yet to move away from their emergency settings, and they're going to perhaps have to do that a little bit more aggressively. Maybe 50 point or 100 point, 150 point moves. So all in all, I suppose what the central bank's doing is trying to stay close to that trend. Who really knows where that trend line growth rate's going to go? Markets have been historically pretty volatile in the last year and a bit, and I suppose we're looking for quite a measured and orderly response from them.
Yeah, and what about the Australian dollar? Who knows where that's going to go as well, because we saw it pretty close to 91 overnight. Do you think that the effect this has had on the net exports might be front of mind for the RBA? And because a lot of people are saying it obviously can go higher.
Yeah, it can, and look, our importers are going to be really quite happy about that, but our exporters that are unhedged aren't going to be so happy about that. And as I've just said, we've got a very strong vested interest in our exporters. It's what's helping to underpin and perhaps drive our economy or our recovery in our economy here. Look, really important. I know it does look like the Aussie dollar can do nothing but continue to grind higher, but I would encourage people to be really quite cautious there. As I said, really, I think those interest rate differentials perhaps underpinning that push higher that's supporting that Aussie dollar dollar drive it higher. And, you know, you've got to sort of perhaps keep your stops a little bit tight. There's a bit of a trader's colloquialism here in Australia that, you know, the Aussie dollar goes up the stairs and down the elevator shaft. So, you know, when those interest rate differentials perhaps do start to come in, we could see a bit of a sudden correction there as well. So I'd be quite cautious there.
Simon Mariner, we have to leave it there, but thanks very much for your initial reaction. As you said, though, even though you didn't get too much of a look at the Treasury Secretary's comments just yet, but I know that's big for us through the day, so thanks very much.
Have a good day.
That's Simon Mariner there from St George. Good of him to join us there for that analysis. Let's just